Hello, I'm Mila.
And I am Jad.
And we're here on behalf of First Time Homebuyer ATL. And today we're talking about elements of an offer. There are three sections to the offer. You have your money section, your deadline section, and your people section. So we're gonna go straight into the deadline section. And there are 4 deadlines in the 7-page purchase and sale agreement that you will have to worry about. The first deadline is the due diligence deadline.
The second deadline is your finance contingency deadline. And the third deadline is your appraisal contingency deadline.
And the fourth and final deadline is your closing date or your purchase date. So the due diligence time period is on average in today's market in Atlanta 7 to 10 days. That means that if everyone goes under contract today, then tomorrow is your day 1 of 7 due diligence days, including weekend and holiday. So this is the time period when you order a home inspection, you get contractor quotes, you research the neighborhood, you maybe go on a date with your significant other, go to the LA Fitness, go to the Kroger to scope out the neighborhood and determine if you really love this place, okay? Because basically if you decide to back out of this place, you have to do it within that 7 to 10 day due diligence range. Just like if you were to buy something at the mall, you have 30 days to return it, no questions asked, and get your money back. Same thing here with the due diligence period. So that means, guys, if you decide to return the property after your DD is up, what happens, Shad?
You do not get your earnest money back.
Yeah, you heard that right. The seller takes that earnest money, which again is 1 to 2% of your offer price, as collateral damage.
That's
Jad,
right.
take it to deadline number 2.
Deadline number 2 is your finance contingency deadline. That means that's usually a deadline that's anywhere between 14 and 28 days of the same exact counting period that we use for due diligence. So if due diligence was the day after, that's day 1 for due diligence. Day 1 for the finance contingency is also the day right after the contract is signed.
Wow.
So the first 14 to 28 days of the contract being signed, you have those 14 to 28 days to get approved for the mortgage if you're using a mortgage as part of the transaction. What that means is that your lender would need to give you a conditional approval or a final approval stating that they have approved you to receive the money that they are lending you to purchase this particular price. Now, if you do not get that approval, that means you have to have a denial letter from the lender. And then if you get the denial letter from the lender, which hopefully is not the case, but if it is the case, you take that, you give it to your buyer's agent. Right. Your buyer's agent then has the ability to go back to the seller and say, the buyer is not allowed to purchase this property because they do not have the money to purchase the property. If that happens within those 14 to 28 days, then the buyer can remove themselves from the contract and they can receive their earnest money back, but only if the lender that's involved in this transaction issues a denial letter.
And that's for the financing contingency.
That's for the financing contingency.
Got you. So that's deadline number 2. And deadline
Correct.
number 3?
Deadline number 3 is what we call the appraisal contingency. Also a 14 to 28 day time frame where you have to have an appraisal, a third-party certified appraisal company come in.
And how much does that cost about?
That costs anywhere between $400 and $550, kind of depending on the property. The person that pays that is part of those closing costs that we discussed. That person would be the buyer, unless the buyer has negotiated, in which case, if they're using a really good buyer's agent, most likely negotiated for the seller to pay some or most of those closing costs.
Oh, okay, great.
Yeah, so it's a great thing that needs to happen, which is a third-party appraisal company comes in and certifies the value of the home. So in this case that we've been discussing, at $104,000 contract price for the buyer to pay the seller for the property, the appraiser would have to come in and say that the property is worth $104,000. Okay,
well, let me ask you this. So what happens if it doesn't appraise for 104 and it appraises for 90? What do we do?
If it comes in at 90, then the buyer and the seller now have to renegotiate. Because what happens is when the bank is going to lend the money, the lender doesn't take the price of the purchase price of the property. They take either the lesser number of either the purchase price or the appraisal price. So if the appraisal comes in at $90,000, according to the lender, the home is only worth $90,000, even though the buyer was willing to
So the bank's not going to loan you the money,
The bank is not going to loan you the money.
So someone's got to come up with that delta difference,
That's
right?
correct.
Okay. So I guess my buyer, if they're not happy with a 90K appraisal and the seller won't come down from 104 to 90, then we can just walk
Yes,
from
you
the
could walk away
contract,
from the
and would we get
contract.
our earnest money back?
You would get the earnest money
Okay.
back as long as all of this happens within those 14 to 28 days.
Mm-hmm.
And those 14 to 28 days are negotiated as part of that initial purchase or offer for purchase in the property.
Could we just get another appraisal done?
No, it depends. It actually it depends on the loan program. If it's an FHA program, then if it's a government program, then it's no, you cannot get another one
Wow,
done.
okay.
The appraisal itself sticks with the property, depending on the program, for a certain number of days, and basically nobody else can buy that property with that program.
No way.
Yeah, not your
That's
buyer can't buy
crazy.
it, and even another buyer can't come in. They have to use that particular appraisal.
So what I learned is that the seller is doing themselves an injustice if they don't reduce it to that appraisal price, because it's going to have to come back on the market, and that property is basically going to be tarnished, right? So
That is correct.
That's great insight. Thank you,
absolutely.
Jad. I guess the fourth deadline. Anything else on that appraisal contingency?
That's it.
Okay, well, the fourth deadline is your closing day or your purchase day. On average, you're seeing closing dates about 30 to 45 days from the day that you go under contract. Again, that includes weekends and holidays. Obviously, a cash buy, all cash buy can close easily in a week or two. If you are doing somewhat of a government program like the FHA loan, which is 3.5% down payment, or a condo, for instance, that usually has higher interest rates than a townhome or say a single family home, those usually take longer to close because there is more red tape or more documentation that Jad, the lender, will need to get to successfully close. So I would budget 45 days to be on the safe side. And just so you guys know, you get one free pass as a buyer. It's called a unilateral extension, where if you can't get to the closing table on time on your deadline, then legally the buyer has a unilateral extension, which means the seller does not need to agree to it, where I believe it's now 7, I think they just changed it to 8 days that you can extend, no questions asked, to hopefully close on time.
That's right.
Thanks for tuning in. For elements in an offer and the deadlines, in summary, there are 4 sections. Section 1 is due diligence, which is 7 to 10 days.
Section 2 is finance contingency, which is normally between 14 and 28 days. And Section 3 is appraisal contingency, which is also between 14 and 28 days.
And the final, Section 4, is your closing day or your purchase day, which is anywhere from 30 to 45 days.
That's right.